Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Monday, July 29th, 2024. How you doing? Hey, I hope you're doing well. I hope you had a good day. Had a nice short trade today, intraday on NVDA on the 5 minute that I wanted to show you. Nice confluence of signals, signals that happen at the same time. As always, with any trade, the more signals that happen at the same time, the better chance of a profitable trade. It also included a very definitive risk to reward ratio, where if I was wrong, I had the chance of being wrong extremely small, with the chance of a nice outsized gain. And that is exactly what happened. So hopefully this will be helpful for you, what I'm going to show you and what I'm going to teach you. And if it is, I would really appreciate it if you could hit the thumbs up button. Really does help out the channel. Okay, here we go. Here is NVIDIA on the 5 minute. Now, we started out the morning very, very strong. We just rocketed up, rocketed up, rocketed up. Now, when we have this move back down here on this bar and then a move up, I keyed off of this because now this is a swing low. Swing low is a low that has a higher low to the left and a higher low to the right. We could have just kept going back up, but I noticed this level right here. Let me just put a line here. That's what I was looking for. When we came down and then went back up, I said, okay, if we come back down and we break it, or in other words, we go below this low, then we're going to have a structure change to the downside. And if you watch these videos for a while, you will see when I have a structure change to the downside, I want to start shorting those rallies. Now, it did work out. I didn't get the trade here though, so it broke and then came back up, and then we had a big collapse, which I could have expected, but I didn't really have a valid signal here. But it's a good example to show you that when you do break structure to the downside, very often you'll have a quick counter rally back up before you move down. That's the irony of these structure changes. When you have a structure change to the downside, almost immediately you'll get a rally back up. Conversely, if you're going down and you have a structure break to the upside, almost as very, very soon after you have that structure break to the upside, you'll usually have a little bit of a pullback before you have a large move up. Makes sense? So we broke the structure to the downside. As soon as we broke it, we rallied back up. It failed, and then straight down. Okay, so this big move down here created a lot of different fair value gaps, and it created an order block. Let's start with an order block. An order block is the highest up close bar before the most recent structure break. I told you we had a structure break here, which we did, but we also had a structure break here because we took out this swing low. So once we took out that swing low, this blue box here is the high and the low of the order block. If it comes back to this blue area, that's a shortable area. Now, when we broke structure here, we have what's called a fair value gap. A fair value gap is different than an order block. A fair value gap is where you have price moving down without any overlapping up or down. This was straight down. This is the gray area. And then we had another order block here in the red area. And this happens quite often. When you have a big move down, you'll have multiple fair value gaps that you can short to the upside, and then the top one is the order block. So, and that's what can kind of be a little bit frustrating about these is that, yes, you could short here, but then your end of bar stop is going to be quite high up here if you're going from a swing high. And so that's too much range for me. So the reason that, and usually I wait for more of a retracement back up closer to the swing high so I don't have as much range, so I have a better risk to reward ratio. Ideally, I like in the order blocks because it's the best risk to reward ratio and probably the biggest reward potential reward to the downside. But I did short here at 113.59. Why? Okay, well, first of all, and remember this is the order block here. This is the second order. This is the first fair value gap, bearish fair value gap, and this is the third one. So when in the future, if we come back into any of these areas, that's a potential short area. But the reason I shorted here at the very, very first one, the lowest one, my least desirable one, because it's furthest away here, is that it lined up nicely with the 200-day moving average. This is the black line. So on the bar that I took the trade, it did go up, reject the 200-day moving average. So it tried to get above but closed below. But in addition to that, the confluence of the signal, the other signal, is that it did test almost to the penny the bottom of this bearish fair value gap. So that was the confluence. Now, the importance of the 200-day moving average here for me was it offered me a great risk to reward ratio. Like I said, I got short here, 113.59. I placed my emergency stop 2 ATRs above, but my end of bar stop was simply any close above this 200. I wanted to keep my stop very, very close. And by rejecting this 200-day moving average to the upside, it did tell me something. It told me that there were no more buyers that were, at the moment anyway, willing to buy above the 200. So let's kind of start from the beginning. Went up, came down, broke market structure. Broke market structure again, which allowed for the first bearish fair value gap, the second fair value gap, and the bearish order block. Went down, then had a nice little rally back up. And again, the bar that I shorted it on rejected the bottom of the bearish fair value gap, but also rejected the 200-day moving average, the black line. So as soon as I got short, 113.59, I always place my emergency stop 2 ATRs above my entry price. This is this red line up here, this thick red line here. That's my worst case scenario. If it just goes rocket shipping up and gets to that, as soon as it touches it, I'm out. And if I've position sized correctly, then I know exactly if it gets there, how much I'm going to lose. That's my end of bar stop. Fortunately, that only happens about 5% of the time. The other 95% of the time, if I do have a losing trade, it will be because my end of bar stop was triggered. My end of bar stop was simply a close above this black line, a close above the 200-day moving average. Okay, so my maximum allowed loss was 2 ATRs. Therefore, for my profit target, I want that to be at least 2 times of what I'm risking. So if I'm risking two ATRs to the upside, I want to be able to make 4 ATRs to the downside. And this is the green line. Right here is my profit target. So one of 4 things is going to happen. 1, worst case scenario, I'm going to hit my 2 ATR stop. 2, I'm going to get a close above this 200-day moving average for a smaller loss. 3, I'm going to hit my profit target, the 4 ATR profit target, twice my emergency stop. And number 4, by the end of the day, it's not going to have triggered anything, and I could potentially have somewhat of a small loss or a small gain. Well, this one worked really great, and it just headed all the way down. And on this bar here, touched my, I had a limit order in, exited the trade. So I was risking about $1.05 to the upside, worst case scenario. And I made, I guess I was a little off, 205 to the downside. So that was 1.8% on that trade. So a little bit of a complicated trade, but not really. But the importance here really is that we had the bearish fair value gap here, the bearish fair value gap here, the bearish order block here. We rallied back up, rejected the first bearish fair value gap, but most importantly, it gave me a really good risk to reward ratio. So I didn't have to sit in this trade and wait for it to potentially close above these highs. That's the real key to this trade, is this 200-day moving average. If it had just closed, 10, 15, 20 cents up, I'd just be out, very small loss, and then I'll just look for something else, maybe look for it to move up and higher into one of these other areas. So that was a trade, really good example of good risk to reward ratio, multiple confluences going on at the same time with really nice profit. So if you'd like to learn more about my trading, if you'd like to learn more about the different strategies that I use and how I look to get into these trades and manage these trades, I have 3 options for you. Number 1, I do a podcast on the weekend called the Gossett Trading and Mentoring Weekend Review. I talk about all the trades that I made in the previous week on the daily time frame, weekly time frame, when I entered, why I entered, what was the setup, what were the confluences, where did I place my emergency stop? Where did I place my end of bar stop? Where were my profit targets? How I'm managing the trade. And then you can see, all the trades currently that I have open, how they're doing and how I'm managing. So I think that's helpful for you. Will be helpful for you for sure. And had a really good week last week. If you want to watch the last Saturday one, I think you'll learn a lot there. Number 2, I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course, just one-on-one, just you and I. I teach you all of the different trading approaches that I use and have used for almost 29 years now. I teach you step by step how to locate them, identify them, how to trade them, and really give you a process. And it's a great course. I've taught people from all over the world, all the way from absolute beginners to the hedge fund level and everywhere in between. So I know that would be a valuable course for you, and it's really an investment in yourself, an investment to learn a new skill. And then third, I have a great online video course at udemy.com. The link is in the description to udemy.com. And that is the deep dip buy stock trading strategy, where I teach you step by step how to trade one strategy, the deep dip buy stock trading strategy. It's a lot of content, 9.5 hours of video, and I've sold so many of those around the world. It has like a 4.9 star rating, so it's a really good place to start. So either the podcast, the weekend review podcast, the one-on-one course, or the video. And between those 3, a lot of good resources and a lot of things to learn. So anyway, I hope this was helpful, everyone. Really do. And if you have any comments or questions, please let me know. And I hope you have a really good rest of your day. Take care, everyone. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.